1,004,681. Just let that number sink in for a second. That massive figure, that's exactly how many vehicles BMW sold in just the first 6 months of 2026. Right out of the gate, we're talking about absolutely staggering scale, right? It's a number that just screams total market dominance. But as we're going to see today in our rapidly shifting global economy, well, even selling 1 million cars might not be enough to dodge a massive financial headache. Welcome to today's Explainer, where we're untangling what I like to call the winner's dilemma, BMW's 2026 paradox. So we've got this fascinating central mystery today. How in the world can a company completely and utterly dominate its direct competitors, maintain a massive global footprint, and yet, almost at the exact same time, issue a severe profit warning to its investors? It's like a giant puzzle, and it perfectly captures just how complex and fast-moving the global auto industry has really become. To unpack this puzzle, we're going to take 4 steps today. First, winning the luxury race. Second, the China crisis. Third, shifting financial realities. And finally, the electric future. Okay, let's dive right into this. Section 1, winning the luxury race. So, in the first half of 2026, BMW is absolutely the undisputed king of the hill. I mean, they are the only German luxury brand to cross that magical 1 million mark. They comfortably blew past Mercedes-Benz, who came in second with 837,200 vehicles. So that's a lead of over 167,000 units. And Audi, well, they're left trailing in a pretty distant third place with 727,200. If you just look at the surface, you'd think BMW is having the absolute best year of its life. But, let's build a slightly more complicated picture here. This is your classic yes, but scenario. So yes, BMW is seeing really solid growth in Western markets. Sales are actually up 3.9% in the US and a very healthy 5.4% in Europe. But globally, the volume is bleeding. BMW is down 6.2% overall year over year. Mercedes is down 7%. Audi is down 7.2%. Even Porsche, which plays in a totally different pricing tier, they saw a 16.5% drop overall. So what we're seeing is every single German luxury brand shrinking globally, even while they're beating each other up for local market share. Which brings us to Section 2, the China crisis. The real epicenter of this earthquake is over in the East. Across the first half of 2026, German brands just saw these cascading drops in China. The BMW Group dropped by 20.4%. Volkswagen Group, which obviously includes Audi, is down 25.9%. Mercedes plummeted 28%. And Porsche, down an unbelievable 32%. Just to put BMW's specific drop into a bit of perspective for you, they hit a peak of 847,900 cars sold in China back in 2021. By 2025, that fell to 626,000. And looking at these early 2026 numbers, it looks like the floor is just continuing to drop. So what's actually going on here? Well, the big takeaway you should have is that the Chinese market has fundamentally transformed. Chinese buyers are increasingly choosing their own domestic brands. And these local automakers, they aren't just copying Western designs anymore. They have closed the gap entirely. They're offering vehicles with comparable and, honestly, in some cases, superior technical specs and really cutting-edge design. Plus, the whole shebang comes at much cheaper prices. This immense competitive pressure from local manufacturers is literally squeezing the market share that Western legacy automakers used to rely on for easy growth. Let's pivot a bit to Section 3, shifting financial realities. Now, it's really important we contrast these current struggles with the incredibly solid financial foundation BMW actually built just last year. If we look back at their 2025 financials, group net profit exceeded 7 billion euros. They pulled in earnings before tax of over 10 billion euros, holding onto a very healthy 7.7% margin. So they prove they absolutely know how to make serious money, even when the environment gets a bit complex. And the foundation itself is incredibly robust. At the end of 2025, they generated 3.2 billion euros in free cash flow just for the automotive segment. That is a massive cash pile, and it allowed them to confidently roll out a huge share buyback program, scooping up 300,000 shares in just the first week of 2026 alone. Basically, everything looked great on paper. But here comes the massive plot twist. Right on the heels of those solid historical financials and all those share buybacks, management had a serious reality check. As they explicitly stated in their recent profit warning, market conditions in China deteriorated during the second quarter, increasing competitive pressure. And what's really key here is they noted this deterioration was particularly sharp in the non-electric vehicle segment. So the internal combustion engine cars, the ones that literally built their empire, are suddenly facing massive headwinds in their single most important market. And this translates to a remarkably severe financial revision. BMW actually had to slash its expected automotive EBIT margin from a really healthy 4 to 6% all the way down to a shockingly low 1 to 3% for 2026. And to add insult to injury, new regional tariffs are forecast to shade an estimated 1.25 percentage points right off that margin. It's basically a perfect storm: slowing demand in the East, intense local competition, and geopolitical tariff battles all completely squeezing their profitability. Finally, we arrive at Section 4, the electric future. To fight back against the rise of these high-tech domestic brands in China, and really to maintain their growth globally, BMW has to lean heavily into next-generation technology. The striking new Mini Cooper EV is just one piece of this broader electric push. But the real heavy hitter? That's the ramp-up of the fully electric Neue Klasse, or New Class. Get this, out of all the pre-ordered fully electric BMWs in Europe right now, 1 in 3 orders is already for the new BMW iX3. The demand is actually so high that their plant in Hungary is already running 2 shifts. They are pivoting hard toward the future. Which leaves us with this really provocative thought as we wrap up today's explainer. Can the innovation of the Neue Klasse actually reverse the tide in the East? I mean, BMW has the scale, they've got the cash flow, and they obviously know how to sell 1 million cars. But as this fiercely competitive Chinese market just keeps evolving, the ultimate question is whether European electric vehicle innovation can win back the hearts, the minds, and the wallets of buyers who are increasingly just looking inward. It is a super high-stakes race, and the second half of this decade is going to be absolutely fascinating to watch.